So today we will understand working capital management. Now what exactly is working capital management? These covers 5 things: liquidity management, account receivables management, inventory management, accounts payable management, and short-term debt management. The short-term debt management means outstanding expenses. So these light blue color items, these two are your current liability management, and these three, the first three, are your current assets management. So when current assets and current liabilities are managed, then we call it as working capital management. So according to the rule, it is gross working capital means all your current assets, and net working capital means all your current assets minus your current liabilities. Means your creditors and payables. Payables are nothing but it may be bills payable, it may be any outstanding expenses. Now, next topic is your operating cycle. What is operating cycle? It means a number of days a company takes in converting its inventories to cash. See, every business starts with cash. From cash only you buy the raw material. Then you go for work in progress, means the half production is done. Then you convert it into finished goods. Then it goes to the store and you sell it. When you sell these products, either you get a cash or you sell it on credit. If you sell it on credit, then it becomes a debtor. Then again this debtor will give you a cash. So means at the end you are going to receive cash. Again from that cash you are going to buy the raw material for a future period. So cash to cash, we have to convert this cash, again comes to the cash. So this cycle is known as the operating cycle. This is the formula for calculating it. Gross operating cycle means anything which is related to your current assets items. Means inventory period and account receivable period. How much days it took to get money from your customer. How much days it took to take money from converting your material, your raw material, to work in progress, to finished goods, into sale. Then comes net operating cycle. If from your gross operating cycle, if you just reduce your accounts payable period, means creditors payment period, how much time you take to make payments to your suppliers, if you just reduce it, it becomes net operating cycle. And this operating cycle, if it is less, if it is shorter, it is considered as a good one. Now there are two methods with which we can estimate the working capital requirements. These two approaches are known as total approach method and cash cost approach method. Approach means that how we are going to consider it. When we are talking about total approach method, there are 2 points that we have to consider in our mind. First, whenever you will take overhead rate, as you know, there are 3 items: material, labor, and overheads. So whenever you are taking overheads, you have to include depreciation in overheads. Second thing, whenever you are taking debtors are going to be taken on the basis of selling price. Now, same thing if it is given in cash cost approach method. First, you don't take depreciation. You are going to ignore it. You are going to exclude it. Second thing is that your debtors are not calculated on selling price. Your debtors are calculated on selling price excluding profit. Or we can say that you are going to just calculate on the basis of total cost. No profit added in that. So this is the difference between total approach and cash cost approach method. This is the way we calculate it. The format is, firstly you write all the current assets, then you write all the current liabilities, and then the difference between current assets and current liabilities, that is known as your working capital. This working capital, if you add your safety margin, then it becomes your net working capital. Now what comes under inventory? Under inventory we are having 3 items: raw material, work in progress, and finished goods. And then we talk about receivables, means your debtors, and then cash. Bill, very rarely you get these items, but these 5 items: material, work in progress, finished goods, debtors, and cash, it will come. And in current liabilities, You usually get trade payables, means you are making payments to your your suppliers. Then your wages payable, any outstanding expenses, outstanding wages, outstanding salary, outstanding rent, everything will come here. So these all are your outstanding things. Now let me show you through one example. Here you can find out some rates are given. Raw material per unit rate is given. Direct labor per unit rate is given. Overheads per unit rate is given. Total cost means including these 52, 19.50 and 39. These three including becomes 110.50. If you add a profit here, it becomes your selling price. Now this we have to see which method they are talking about. They are talking about the total cost approach method. And if you remember what I told you in the total cost approach method, you can see here, include depreciation in overhead. Let's see whether they had given depreciation or not. Second thing, amount for debtors is calculated on the basis of selling price. Now let me go to the question again. Here it is given 130. So just keep this in mind. Second thing which I want to tell you, find out the number of units annual production, that is 70,000 units. We are going to take this item in every calculation. Then for each and every item, some other information is given. Like for raw material, they told it is in stock in warehouse for 1 month. Average material in process means work in progress. Work in progress means all three things together. Material, labor and overheads. This is for half a month. Finished goods, again we are going to take all these three items. Then credit allowed by suppliers. What we take from the suppliers? Raw material. So here that means we are going to take this raw material. Then credit allowed to debtors. What we give to the debtors? We give to the debtors of finished goods. Now this debtors, if you remember total cost approach method, we have to take it on selling price. We cannot take, if it is a cash cost, then we have to take this rate. For total cost, we have to take 130 rupees. Like that, wages we make 1.5 weeks later, overheads 1 month later, and 1/4 of the sales are on the cash basis. On this basis, now we have to calculate. One more information which is very importantly given here is, in a month they are saying there are 30 days. So according to this, how many days are here in a year then? Yes, 30 into 12. This is going to be 360 days. And how many weeks then? 52 weeks. So we have to make all our calculations by keeping all this information in our mind. Now let me show you how we are going to calculate it. First, current assets. All the items of 5 items will come. Your raw material. Then your work in progress. All these are the work in progress items. Then stock of finished goods, debtors and cash. So that means we are going to have these 5 items. Then we are going to have our current liabilities. Out of your current assets, when you reduce current liabilities, it becomes your net working capital. Now how we will calculate it? Firstly, in every calculation you will see this 70,000 unit is written, means annual production. This we are going to write. Multiply with 52. What is this 52? This is the unit rate of raw material. Then 30. 30 is how much? Because it is told 1 month. The raw material is kept in a store for 1 month. So 1 month means 30 days. It was given in a question that we will take for 1 month 30 days. Then divided by 360. Because in 1 month 30 days, so in 12 months it's going to be 360. Then similarly we will calculate for work in progress, finished goods, debtors and cash. Same process, same method is there for that. And then for here you can see if it is a week, you can find out it is 1.5 week, 1.5 week divided by 52. So if it is a week, divided by 52. If it is a days, divided by 360. So according to that, if we calculate, we will find out our net working capital. So that's it for now. Thank you so much, and I think you had understood it. If still you are having any queries, you can put it on the comment box. Thank you.